Hi, this is week one, assignment one, and week one has the accounting transaction practice. It it asks you to answer the following questions about each of the business transactions. It says the owner deposited $10,000 in his new business checking account. We automatically look at the transaction. We automatically know that since he deposited 10,000, that has to mean that he deposited cash. So the cash account is getting affected, which is under assets, and we automatically know that it actually increases. Other than the cash, because he did invest, that means that it's a part of his capital. So capital is the other account that gets affected, which is under owner's equity, and it also increases. Now, cash is a part of assets. Capital is a part of owner's equity. They are a part in the equation because we automatically know the equation is assets is equal to liabilities plus owner's equity. Since they both increase, we automatically know that this side of the equation, assets is $10,000 equals to $10,000 of owner's equity. Now we look at the video, we look at the tab sheet, and the accounts that we have been dealing so far under assets are cash, supply, prepaid insurance, and equipment. So cash increases by $10,000 on the left-hand side of the equation, and owner's equity increases by $10,000, which is on the right-hand side of the equation. This red line right here, or in the column F, kind of symbolizes the equal sign. So obviously this side of the equation has to be equal to this side of the equation. And then this right here just basically balances of each of the equations and accounts payable, capital, and the total. So let's go with the second question. The second question says $300 worth of supplies were purchased on account. Now the two accounts that get affected are cash, because we automatically know that $300 were paid cash. Well, it tells on account. Never mind. So it tells you that they were paid on account. So the two accounts that get affected are supplies. And supplies is a part of assets. And supplies obviously increase. Now, since the supplies were purchased on account, meaning they got out a loan, accounts payable was affected. And accounts payable is a part of liability. And it also increases. Okay, so then we go to the tab sheet, and the tab sheet we go to number 2. We automatically see that the supplies have increased. Let me just allow for the numbers to be added to it. So the supplies increased by 300 and accounts payable increased by 300. Now automatically when we try to equalize, we automatically add all of our assets, add all of our liabilities plus owner's equity, and these two should equal out. So we have $10,000 in cash plus the $300. Our left-hand side of the equation is actually $10,300. Our right-hand side of the equation is 10,000 plus your 300 is $10,300. Now let's go to the next question. The next question says, paid a $300 premium for 6 months of liability insurance. So the two accounts that get affected by this are insurance, and let's actually take a look at the tab sheet. Prepaid insurance is what it's actually down for. So prepaid insurance is the account that gets affected, and it says paid a $300 premium for 6 months of liability insurance, meaning that it doesn't tell that they paid on account. If it doesn't say on account, that automatically means that it's being paid cash. So the other account that gets affected is cash. Prepaid insurance is a part of assets, and it is under assets because it hasn't still been used. So it's part of assets, and cash is a part of assets as well. Prepaid insurance increases, obviously, because we're paying prepaid insurance of $300, and we're paying it with cash, so our cash decreases. So we go back to the tab sheet, and we look to the cash with a minus 300 here, and prepaid insurance is 300. Now within the same exact transaction, they have to equal out to 0. So because we're taking out cash over here, we're adding 300 right here, which means that minus 300 plus 300, that equals out to 0. All right, let's take a look at the next transaction. Transaction number 4. Transaction number 4 says purchase $200 of supplies for cash. So we know that supplies is getting affected, which is a part of assets. And obviously it is increasing. And we know cash is getting affected, which is a part of assets. And cash is being decreasing. Okay, so we go back to the tab sheet and we say minus 200 for cash plus 200 for supplies. Now automatically we kind of know how much cash we have left. We started with 10,000. We purchased prepaid insurance for $300, so now we have 9,700 left. And then we purchased another $200 for supplies. We have 9,500 left of cash so far. We have $500 worth of supplies. We have $300 worth of prepaid insurance. Okay. Let's go to the next question. The next question says, purchase $4,000 of equipment by paying $1,000 in cash, and the rest will be paid in 6 months. And automatically, the moment that it says it will be paid in the future, that means it's on account. So you're getting affected. It's affecting 3 different accounts. It's affecting the equipment account. You kind of have to break it down to different parts. The equipment account is under assets, and obviously it is increasing because we are purchasing equipment. So he paid $1,000 in cash. So cash is also getting affected, which is a part of assets, and it is decreasing. And the rest will be paid in 6 months, which means that we have taken out a loan, which is accounts payable, which is under liability, and that is increasing. Okay, so automatically the left-hand side of the equation has to be equal out to the right-hand side of the equation, within the transaction itself. So we automatically know that equipment is being increased by 4,000, but cash, we are paying $1,000 in cash. So minus 1,000 plus 4,000 is $3,000 under assets. And our accounts payable, we've taken out a loan out of $3,000. So automatically we know that the left-hand side of the equation, minus 1,000 plus 4,000, is equal to 3,000. Okay. The next question is question number 6. Says pay the $300 bill outstanding from transaction B. So when you look at transaction B, he got a loan to pay for supplies. So he paid that loan, and obviously you paid with cash. So cash is getting affected here, which is under assets, and it's actually decreasing. And accounts payable is getting affected here, which is under liability, and it's also decreasing. Okay, so we go back to the tab sheet, and we see minus $300 under cash, and we see minus $300 under accounts payable. And then we go to the next transaction, which is transaction 7. It says purchase supplies on account for $550. So we automatically know the supplies is increasing, which is a part of assets. And since they're paying it on account, that means that accounts payable is increasing, which is under liability as well. So we go to the actual sheet, tab sheet. So 550, I believe, is increasing, and 550 on accounts payable. All right, then we go to transaction 8. Transaction 8 says paid $550 for the outstanding supply balance purchased in transaction 7. So we're just going back to pay the transaction. So we go back to the transaction practice, and we automatically know that cash is being taken out, which is a part of assets, and it is decreasing. And it is accounts payable, which is under liability, and it's also decreasing. Alright, so then we go back over here. If we do minus 550 on cash and minus 550 under accounts payable. So we have 2 more transactions and we will be done. Transaction number 9 says purchase supplies on account for $1,200. Again, supplies is increasing, which is under assets. And we have accounts payable, which is under liability, and it is also increasing. And supplies, which is, I believe, column C, yeah, and it is for $1,200, and accounts payable for $1,200. And then we have the last transaction, which is paid $600 on the supplies purchased in transaction 9. So what automatically knows, so anytime you pay an account, you have to pay with cash. So cash, which is under assets, is decreasing because you are paying out a loan. And accounts payable, which is a part of liability, let me try it, which is a part of liability, is also decreasing for $600. So we look at cash right here, we say minus 600. We look at accounts payable, we say minus 600. So now what I want to do, because we've finished all these transactions, I am going to summarize or sum how much cash do we have left, supplies, prepaid insurance, all that good stuff, and then we'll know exactly what our assets are, liabilities, and owner's equity. So I'm going to do the sum of cash. And you can just follow exactly what I'm doing, so that way you can do it on your own computer as well. So we have $7,050 of cash. Let's see how much supplies we have. Oops. We have $2,250 worth of supplies. Let's see how much prepaid insurance we have. One thing that you can also do is you can just kind of autofill, and automatically autofills everything. And that's what I'm going to do for the rest. So we have 3,600 for accounts payable, and we should have 10,000 for capital. 10,000 for capital. All right. So then I am going to sum of all our assets, and if I sum all of the assets right here, that gives me an assets is equal to 13,600. And if I sum my liabilities plus owner's equity, it gives me a sum of 13,600. Then I try to balance it here, so I want to know how much cash is. And if you just wanted to kind of transfer the data from the tab sheet, you would put an equal sign, go back to the tab sheet. This would be cash. Click on cash, press enter, and automatically gives you how much cash there is instead of actually just inputting the number. So supplies equals to 2,250, prepaid insurance 300, and then you have equipment, which is 4,000, and then you have the total, which is the sum of all of this, and it's 13,600. It's the same exact thing as in the tab sheet. And then you have accounts payable, which is 3,600, and then you have capital, which is still 10,000, and your total is the sum of your accounts payable and capital, which is 13,600. That pretty much concludes assignment 1, week 1. If you have any questions, please do not hesitate to contact me.